Welcome to Short View Trading. This is your morning market hit for Monday, 5th of August. It's around 9 a.m. London time. What matters today for markets? And in particular, if you're a trader of US equity futures, what should you be thinking about and focusing on? Which short-term models and indicators will give you the clearest steer on near-term market direction? That's the purpose of this video. Global equity markets are trading sharply lower this morning with a crash in certain Asian indices, most notably in Japan. The Nikkei 225 down 13.5% on the day and 19% in just the past 3 trading days. That's a crash in the Japanese market, driven largely by ongoing yen strength. Dollar yen is down 2.4% overnight. It's 7% lower in the past 4 trading days, moving sharply below its 200-day moving average at 51.50. Other markets have also sold off sharply, like the Taiwanese and Korean markets, with the weakness centered around tech-heavy indices like the Kosdaq, which is on your screen now. That's down 11.3% today. And the weakness has been spilling over into other markets like Jakarta Comp down 4%. Singapore Straits Times Index is down nearly 5%. The yen has been a funding currency for a long time. That's now unwinding rapidly and increasingly destabilising the risk on trade in markets. You can see US equity futures, if you look at the S&P 500, opening notably lower this morning, down about 3% earlier today and about 200 points away from its 200-day moving average. Other indices like the Nasdaq 100 have already reached that 200-day moving average level overnight and have pushed below it. The Philly stocks got there on Friday last week. And of course, adding to the weakness in US and global equity markets, there are growing concerns about the risk of a US recession. Friday's non-farm payroll number was troubling in that sense. The unemployment rate jumped to 4.3%, having trended higher for the past year or so. Normally, when it moves sharply higher like that, it's because a recession is about to start, if it hasn't already. So how should we trade this market? Is this a near-term buying opportunity in US equities, or are we in the midst of a stock market crash? We address questions like that in our daily risk appetite gauge publication. In it, we make a 1 to 2 week trading recommendation, long or short, on US equity futures. It's available on the website. We also offer a free trial. If you're interested, click on the link below, enter your name and email address, and we'll set you up with a free trial of our daily trading publication. What gives us an edge as we make these calls on markets? Well, it's indicators like this one you see on your screen now. This is our short-term puts call indicator for the Nasdaq 100. It's useful in environments like this one because it gives a sense on how much fear and panic has been priced into markets in the near term. Interestingly, as of Friday's close, the 3-day smoothed put to call ratio hadn't reached its buy threshold. So on that measure, there was further room for weakness in tech stocks. Clearly though, with a spike in volatility overnight, as you can see on this chart of the VIX, which is implied volatility for the S&P 500, the case for a relief rally is clearly brewing. So how are we trading this market? What are the signals we're getting from other short-term models? Have a look at our daily publication for detail on all of that. What are we watching this week? Well, later today, 3 p.m. London time, we get ISM services out of the US. That'll be watched closely. Later in the day, it's the Senior Loan Officer Survey. This is credit conditions in the US banking system. Wednesday is consumer credit. Friday is Chinese inflation, both CPI and PPI. There are speeches from various Fed governors through the week, including Daly, Barkin, Goolsbee and others. We also have lots of earnings. So plenty going on this week. That was your morning market hit. Do follow us on YouTube, search under Short View Trading. Join us on Twitter, LinkedIn and or Facebook. Thanks for listening.